but this forecast to come true or to be accurate needs home prices to actually increase in the back half of the year. But I'm just not thinking they're going to get this one right as of where they're at. Again, they're probably going to revise this. I told you so, and boy does it sure feel good to say that. My name is Matthew Pfeifer, real estate agent in Regina. That's my trusted assistant, Matilda. This is the weekly news recap here on Bald Prairie Real Estate, where we go through the most interesting Canadian real estate related news topics, and I give you my thoughts and opinions on them. And Royal LePage has come out now with their newest housing market forecast and revised things down significantly. So we're going through that. But of course, we're going to start off with another one of my terrible bad dad jokes. Why did the coffee have to file a police report? Because it was mugged. If you have a terrible joke I can use in future episodes of Bald Prairie Real Estate, put it in the comments below. Let's get into this week's news. Starting off, this is from blog.to talking about the number of power of sale listings increasing significantly in the Greater Toronto area. These type of articles, and we see it on Twitter, X, whatever we're calling it now these days, really popular right now. And I get it because, you know what? It's a juicy headline. I thought about using some version of that for the title of this video, but we got better topics to talk about coming up. Yes, power of sale listings are up. Yes, I expect them to continue to rise in Toronto. And when it comes to power of sale foreclosure listings, I've actually done a really good video explaining the differences between the two, because they are actually two very different types of sale. So you should check it out. I'll put a link to that in the description below, and hopefully those pop-up cards just popped up so you can click on the video there. When it comes to power of sale listings or foreclosures, the chart I'm going to put up here is from Twitter, X, again, whatever we're calling it. They show, I think it's 200 total active listings. I believe that number is actually closer to 400 when I'm talking to my friends in Toronto. So we're just going to go with 400 from now on. Yes, that's up like 120 or 250%, whatever the number is from last year, and probably the same amount from the previous year. Yes, that sounds really, really scary when you just use it as a headline. But if you go look at that chart again, look a couple of years ago, it was essentially zero. There was basically no power of sale or foreclosure listings in Toronto. So it only had one direction to go, up. And it's going to probably continue to go up, like I said. Now, let's say there's 400 total foreclosure listings in Toronto right now. There's 19,000 active listings. So that 400 is what, 1.5% roughly of the total active listings, or about what sells in 2 or 3 days, at least according to last month's sales pace, which was one of the slowest Septembers they've had in decades. Again, yes, these numbers are going up. They're probably going to continue to go up. It sounds really scary when you say they're up 100 or 200%. Put it into context, that's still an extremely small number of foreclosure listings available right now in Toronto, even with how much it's gone up. Real quick pause here. If you're thinking about buying a house in Regina, obviously I'd love to help you out. But if you're somewhere else in Canada, don't worry. I can get you set up with a perfect real estate agent that I'll handpick for you. If you check out the description of this video, you're going to see a link to my calendar where you can book me in for an agent recommendation consultation. I'll give you a call, learn about what's important to you in a house and a real estate agent, and I'll get you set up with that perfect agent in your market. And now let's get back to the video. And speaking of foreclosures, let's talk about mortgage arrears. This is from the Canadian Bankers Association. They put these out usually that first week of the month. I think they're really good stats to go through because mortgages in arrears are generally what leads to foreclosures. Remember that on average, only about half of homes that end up in arrears actually end up in some sort of foreclosure or power of sale. So when we're talking about these numbers, just remember that, put that into context here. And I know, again, a lot of people, just like the foreclosure stuff, like to cherry pick data. They take the bottom point, which was basically a year and a half, 2 years ago, and say, look how much mortgage arrears has gone up. Oh my God, it's going crazy. Yes, it's gone up. And yep, it's probably going to continue to go up. So right now, mortgage arrears is about 0.2%. It bottomed out at about 0.15-ish%, somewhere in that range. The pre-pandemic levels, which was already considered historically very, very low, 0.3%. So even with how much it has gone up, we're not even close to yet where it was pre-pandemic, which was already considered extremely low. If you want to put it in pure numbers, it's about 8,000 or 9,000 mortgages in foreclosure, that are in arrears, not foreclosure, in arrears right now, of 5 million total mortgages in Canada. I also want to bring up this chart here showing mortgage delinquency, if you look at it, through about the 1990s all the way through to today. And you can see it's been on a steady decline down. There's been ups and downs along the way, but it is historically low even compared to just a decade or two ago. And the next chart here, if you're looking at us compared to the United States and the United Kingdom, Canada is significantly lower in mortgage arrears than both of those countries are right now and have been historically. At the end of the day, Canadians pay their mortgages significantly more than what we see in the United States and Canada, or United States and the UK, where they have a lot more foreclosures. In Canada, people pay their mortgages, they stop paying everything else, they tend to hang on to their houses. Now let's do a deep dive into the rentals.ca rent report. Right off the top, I have to say, when I'm talking through the rentals.ca report, they always report asking rents, not what people are actually paying for rent. That is generally going to be lower, but this does give an indication as to where things are going. So if they say a place is renting for $1,300 a month, that's asking rent. The actual rent may be lower than that. Looking at the national average asking rent, it's about $2,100 a month, which is what has been since June, so basically flat, although that is still essentially at all-time highs. Looking at Toronto and Vancouver, Canada's two most expensive markets to rent, those have both seen very significant price declines year over year, about 8 and 10% respectively. I think that's also going to continue for the next little while as well. When it comes to the largest year-over-year increases, it is the prairies predominantly that dominate the most affordable places in Canada to rent. We're also seeing the largest year-over-year increases. In fifth place, Edmonton saw rent go up between 9 and 10%. In Regina, it was between 12 and 15%. Winnipeg, between 10 and 16%. Quebec City saw between 10 and a 22% increase. And Saskatoon leading the pack with an overall 22% increase in both 1 and 2 bedroom for their asking rent. Saskatoon's seen rent go through the roof this year. Let's talk about what I think is becoming quickly the most popular segment of these videos, the best available mortgage rates. Now, I always break this down into insured and uninsurable mortgages because those are two different categories. I am doing a video explaining the differences between insured and uninsured mortgages. I think you guys like that, so get subscribed so you don't miss that video when it comes out. Starting off with insured, the best 3-year fixed rate I could find was the Radius at 4.44%. The best 5-year was through Manulife, 4.29%, also an increase from last week. When it comes to the best 5-year variable rate mortgages, the best adjustable I could find was 5.45 through Marathon. That is a little bit of a drop. The best static was 5.32 through Manulife, and that is also a drop. On the uninsurable side, the best 3-year fix I could find, 4.79 through B2B, unchanged from last week. The best 5-year fix was 4.74 through TD. That is a slight increase. On the 5-year variable side of things, the best adjustable is 5.95 through Strive. That is an increase. And the best static variable, 5.94 through TD, also an increase. For the big 5 banks, the best 5-year insurable rates I could find are as follows. In first place, CIBC, 4.34, unchanged. BMO comes in at second this week, 4.45. That is a little bit of a drop. TD comes in at third, 4.49, unchanged. RBC in fourth, 4.74, unchanged. And Scotia, 4.79, also unchanged. And now let's get to the I told you so moment, the Royal LePage quarterly housing market outlook. They titled this article saying that the Canadian real estate market is in a rebound or recovery mode. I would say at best, that's overly optimistic. Their last 2 quarterly forecasts, remember, were saying that we'd see house prices end the year up 9%. And again, this is year over year comparing to last year. So end of 2024 versus where we ended 2023. Now they have downgraded that forecast to saying prices will be up, still up, 5.5%. Now, I still don't think we're even going to get to that, but saying that the real estate market is rebounding and then slashing your forecast by 50%, yeah, I'm not sure those two go hand in hand. They pointed out 2 categories of buyers that currently aren't as active in the market. First-time home buyers, which they felt are sitting on the sidelines because even though rates have dropped, home prices still haven't really moved that much this year. And when it comes to that small investors buying, smaller condos, right now the cash flow just doesn't make sense even with the interest rates dropping. And because prices aren't appreciating, investors aren't willing to eat a loss month to month. I think they missed a very important category, and that is what I call the move up buyers, those that are already in a starter home that would look to potentially buy a larger home, and they're just simply not making the move right now. They're not putting houses up for sale, and they're not purchasing something because 2 things I think are happening. One, They're in some cities like mine, for example, saying there's nothing available. I'm not going to put my house up for sale. We're down like 50% inventory in Regina. Or the other side of it, if they're in an existing mortgage that has a really low rate, sub 2 or 3%, they're going, I can't afford to make that move to a larger home with its more expensive payment because it's more expensive and because interest rates are going to be, double or triple what I'm paying right now. Or they're saying, I just don't want to make that move because it's going to cost me significantly more if I have to give up the mortgage. Those that have portable mortgages, which if you're getting a mortgage is a really good option to have, so check into that, not just the best rate. Those are portable mortgages. They're the ones that are able to make those move-up purchases right now. What I think I dislike the most about this housing market outlook, though, is a line from Royal LePage's CEO, 𝗫𝗀𝗄𝗏. I'm going to read it here for you. We believe that both groups, talking about first-time home buyers and small investors, will re-enter the market in significant numbers as property values begin to rise again. With further rate cuts from the Bank of Canada likely this year, we anticipate prices will appreciate more quickly, eliminating the advantages of waiting for first-time home buyers and making the calculations more favorable for investors. Remember when people were saying, and this isn't just Royal LePage, people were saying that when the Bank of Canada starts cutting interest rates, first-time home buyers and everybody else that are sitting on the sideline, that pent-up demand will flood into the market, and then all of a sudden sales will go through the roof and prices will start increasing. Does that line sound familiar? I didn't buy it then, and I'm not buying it now. But what I hate most about this is the idea, well, you better hurry up and buy now or else bad things will happen. And it's the same as the people that say, you better wait, things will get better, prices will drop if you just wait a few more months. Both of those groups are equally wrong in saying that, and it bugs the heck out of me. Because you know what? Neither of those groups are going to cover your losses if they're wrong, and neither of them know what the heck's going to happen. We've already shown time and time again, nobody can predict where the real estate market is going, and you guys know my line already. When you've made the decision that it's best for you to buy a house in your personal situation that nobody else knows and can forecast, then you go out and you buy the best house you can, you get the best deal available at that time. Besides 𝗫𝗀𝗄𝗏's comments, the other part that I really disagree with in this forecast is their regional/city breakdowns. Now, I'm not going to go through all of them individually, just some of the highlights here. So Toronto, I'm going to see prices up 6%. That's just not going to happen. Vancouver up 3%. I don't think that's very likely. I think Vancouver's end of the year kind of basically a wash, 0%. Calgary going to be up 8%. That's highly unlikely at this point. Montreal up 8.5%. And Montreal's had a good year, much like Calgary. I just don't see them being up 8.5%. I'd call that highly unlikely. Edmonton up 6.5%. This one I actually think is going to be pretty realistic. Both Edmonton and Saskatchewan are likely going to fight it out through the end of the year, seeing the highest year-over-year price increases, probably in that 6 to 7% increase range. We'll have to wait and see. And my market in Regina, they're saying it's going to be up 6.5%. I think it's more like 4, 5, maybe 6%. We'll have to wait and see. But what do you guys think? I want you guys in the comment section below to say where you think national prices are going to end the year up. So again, Royal LePage has them up 5.5%. And then if you're feeling really brave, go through some of these individual cities and let me know what you think. Are those prices going to be up or down, and by how much? And after you're done making those predictions, you should check out this video right here. Subscribe to Bald Prairie Real Estate if you haven't already. And as always, thanks very much for watching.